Good morning, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here. Today is the 9th, Monday, the 9th of March, 2020. And, well, it's starting out like a... Anyway, listen, I predicted this was coming. I said 2,000 point drops on the stock market. Here we are. We're in the first big drop today, and the circuit breakers kicked in on the market. There's going to be two of these days where the circuit breakers are going to have to kick in, the way I see it. This is just the first one. I'll tell you what the big thing is, well, let's open up the charts right here and take a look. 2.5 trillion wiped out as world stock crashes the most since 2008. 2.5 trillion wiped out in one day, I'm going to tell you what. It's just like if there was a bunch of gangsters, and they got this guy and they want him to talk. Say he knows where a very large amount of money's hid or something like that, and they really got to get him to talk. So they try everything, and the guy won't talk. So finally, one of the gangsters takes him out and dangles him by his ankles. And he has to look into the abyss before he'll start to talk. That does it, though. That does it. He starts to talk after he peers into the abyss by hanging by his ankles. This is what's coming for the Fed. They're not going to start the real great print until they stare into the abyss, And the reason why this is going to happen is very simple. I'm going to tell you the reason why this is going to happen. Why the Fed's going to have to stare into the abyss. You ever seen these news forecasters about a week or so ago, a number of days ago, and they're trying to comfort everybody out there about this disease, this plague, this thing, this virus, trying to comfort everybody. And they were coming on about a week ago, and they were saying 80% of the people come out of this just fine. They were telling everybody about 80% only experience mild symptoms, and they come out of this whole thing just fine. And that's what they were telling you about a week ago to try to quell fear, right? Well, that information is probably correct because all the major news sources were carrying that, and they were talking about it. They were coming on the news doing that, right? Most people brush the whole thing off when they hear that. They say, well, 80% of the people are going to be just fine. It's just flu-like symptoms. What they weren't talking about is, what about the other 20%? Okay? Now let's just crunch the numbers for a minute. 330 million people in the United States. What's 20% of that? And how do we handle something like that? This is the reason why. You just have to crunch the numbers. 20% of 330 million is going to be a big problem. It's going to be more than a big problem. It's going to be catastrophic. And honest to gosh, guys, I'm telling you right now, you just have to go by the numbers that these guys give you. They give you these numbers about a week ago. They were all over the media talking about 80% is going to be just fine. Well, that's not what we're really concerned about here. We're concerned about the 20%. And that's their numbers. Myself, I think it might not be as high as 20% is going to have problems, but it might still be quite a high number. It might be 10%, or even if it's 5%, even if it's 4%, big problems. Okay? So just crunching the numbers, that's going to pull everything in the entire economy. It's going to keep pulling everything down until the Fed is staring into the abyss. And at that point, when the Fed stares into the abyss, That's when they're going to capitulate. They're going to give in. They're going to say uncle at that point. And because at that point, they're going to come to a realization in their mind at that particular point when they stare into the abyss. See, they're sitting up there in their ivory tower. And they have no fears in the world. It's like nothing can touch them. They make the rules and everything else. But when they stare into the abyss, suddenly they're going to realize, hey, you know what? Maybe we're not so protected in our ivory tower. Maybe if the entire system collapses, we're going to fall down with it. Oh boy, we got to do something. We got to do something. We've got to print. What can we do? Well, we got one tool, guys. We can print money. And that's what they're going to do at that point in time. They're going to go into what I call the Great Print. And I've been talking about this for a long time. It's going to happen. It's going to happen. So all these guys have been rushing into the dollar-denominated assets at that point in time. Once the Fed sees the light, once they're into this moment, when they see the light, that's when you're going to see the change in the price of gold and silver, really, you know, because, I mean, this deflationary pressure that we're under right now, this is not letting gold and silver rise. And in fact, it's pushing it down, pushing down the price of oil. It's pushing down the price of everything. It's a tremendous deflationary pressure right now we're under in the system. That's going to flip when the Fed flips the money creation switch. Never forget in the back of your mind. Keep it in the back of your mind. Do not let it go anywhere. Always remember that the Fed can create as much money as there are leaves on the trees out there in your yard. You know, when you clean up your leaves in the fall and you burn them, they can create as many dollar bills as there are leaves on the trees. And so all these investors out there who are running in right now, before the Fed's seen the light, all these investors are out there running in right now, and they're all collecting these dollars and hoarding them. It's like hoarding the leaves in the front of your yard. Doesn't make any sense, does it? You know, they're worthless. And that the dollar is worthless. And the real thing that's of assets and of value, which is precious metals, which are limited supply and everything else, they're not really touching them yet. They're just kind of like over on the sideline. They're not going for that yet. Because they haven't come to that realization, too, that the Fed's going to do this. Anyway, let's move on. Enough talk about that. Let's get looking in there and see what's going on in the markets today. Live gold price. You know, you see gold's not really going anywhere, can't you? Let me see. Let me get the price today. No, this is silver. Sorry, this is silver, but it's a very similar looking chart. 16.89 for silver. It's down 32 cents on the day. So this silver. Where's me gold? Where's me gold? This is a new chart. I don't know how to operate it, how to switch it over to gold. Price of gold. Here we go. Price of gold. Charts. Spot gold. The spot gold price. The low, it's hovering around $1,700, it looks like here today. Anyway, let's move on and take a look now at cryptocurrency. Cryptocurrency, you can see gold and silver haven't really went anywhere. They're not touching it yet. They're really moving right now into treasury bonds. Let's take a look now at market capital. Market capitalization's $223.4 billion for cryptocurrencies. Bitcoin, 63.9%, 0.6%. And we're looking at a price for Bitcoin of $77.86. So see, they're not going into cryptocurrency either. You know, there's only two avenues out of the dollar. That's cryptocurrency, gold, and silver. Those are the only two roads that lead out. And so if you're in a burning city, those are the only two roads away from the burning city. And they're not taking them yet. You know they're going to take them. It's just that the heat hasn't hit them yet. Anyway, let's move on and take a look at the Dow Jones today, you know. Looks like 1,551 points down right now, and 24,313. We got a falling Dow, you know, and I predicted 2 big days, you know. First, when I first started predicting, I predicted 1 big day, the big day we're having today, you know. And then I said there's going to be 2 of them, 2 of these big days, you know. 2 big days down. The Fed's going to react. I don't think they're going to react really on the first day. I think they're not going to stare into the abyss until we get the second big day, you know. Anyway, we're moving on here. We've got a really heavily fallen Dow today, and now let's take a look at crude oil. It was in the 20s last night when I went to bed. Now it's back up into the 30s, you know. They're trying right now through their normal monetary policies and their normal channels to support these markets. But there's going to come a point where that ain't going to work. It ain't going to work. And that's how they've got to bounce back, you know, in some of these things. Like, look, crude's bouncing back. The Dow has been trying to bounce back. They're doing everything that they can with their normal policies. It's going to take more than normal policy at this point in time. U.S. Treasuries. You know, I'm going to tell you guys, what's really scary is this situation is so immensely powerful that even with their money creation tool, when the Fed flips and they finally see the light, you know, and they start to really create money, I'm not so sure that is going to really help all that much, other than cause hyperinflation, other than cause, at this point in time, because this situation is so powerful, the only thing that's really going to help restore things is when this virus is gone. You know? That's the only thing that's really going to help restore things. And the Fed is going to go into massive amounts of money creation, and they're going to basically kill the dollar. But that might not really help all that much in the general economy. It's only going to help Wall Street and stuff. But, I mean, in the end, it's not even going to help them. In the end, everything's going to move into gold, silver, and crypto. That's where it's headed with all of this. Because basically the city's on fire and there's only 2 roads out, gold, silver, and crypto. And, okay, look at them running into the U.S. Treasuries today. Massive moves into these Treasuries, and they're driving these yields right down to 0. Soon they'll be at 0, and soon they'll go below 0 if it keeps going, because we're seeing yields here only 26 basis points above 0. On yields, you know, even on the long bond, it's not even 1%. It's fell below 1% on the long bond. 30 years below 1%. Let's take a look now at the dollar. 95.10 on the dollar. 95.10. So we're seeing a dollar that's easing down, you know. Anyway, listen, guys, the market turmoil is beginning, and it's a situation that's pushing this turmoil into place, you know. This situation is almost like a crowbar. It's kind of like if a guy had a board that was nailed down really tight, and he tried to get the board up. He used screwdrivers and everything else. He had a dozen screwdrivers trying to pry the board up. And the other guy says, hey, listen, you want that board to come loose? Let me go to the truck and get the big crowbar. You know, the crowbar that's got a 4-foot-long handle on it. The guy goes to the truck and gets the big crowbar, and he starts to stick that crowbar in there, and he hears the nail popping, finally. You know, the board starts to come off, and it's so tight, it's making loud pop sounds. With the big crowbar, though, it's got that leverage. Well, this virus has got an awful lot of leverage, tremendous leverage against the system. And that's why the Fed's going to be staring into the abyss before long. Okay, listen, thank you guys for listening to this report. Like and subscribe. Give me a thumbs up. We'll catch you guys in the next show. And have a great afternoon. Bye-bye.